How does a bank collapse in 48 hours? Well, welcome back to the Satoshi Club. I'm back for another video to explain the Silicon Valley Bank failure and what it might cause for the market situation we're in right now and for the next few years. So if you enjoyed the video, slap the like button and let's just get straight into it, right? Silicon Valley Bank has faced a sudden bank run and capital crisis. And for those of you that don't know what a bank run is, it's essentially when a lot of people get into the bank and they're like, okay, investors or depositors, and they say, okay, I want my funds back. But at some point when panic strikes, right, and a lot of people want to get their funds back out at the same time, at one point the bank will not be solvent enough to pay out all of these people, and it just triggers absolute chaos. Everybody wants to come in the bank, everyone's asking for their money back, and the bank in turn goes bankrupt. So the SVB collapsed on Friday morning and it was taken over by federal regulators. It was the largest failure of a US bank since Washington Mutual in 2008 as a result of the financial crisis caused by the housing market. And here's a little bit of info about this whole entire SVB situation so that you guys know exactly what's going on and what it means for your portfolios, for the crypto market, and who's maybe going to buy this bank in the future, and what this means for the market in general. So it was founded in 1983 and SVB actually specialized in banking for tech startups. So it is quite nicely connected with the cryptocurrencies themselves, because cryptocurrency is considered a technology, right? Blockchain is a technology, and that is why we've seen, in the recent times that the prices, since Friday have actually dropped quite a little bit. But for me, this is a completely normal drop in a range that we already said was completely normal in some of the previous videos. I already said, the price is very likely to fluctuate within this area, and if we do break out towards the top, we could head into the 30k mark. But if we do break out towards the bottom of this zone that we have created right here, we could go down into the 10k mark for one last retest before the Fed starts pulling back interest rates and the market can allow itself to recover, right? So what exactly happened and who is to blame for this SVB failure, right? Well, first of all, you have the Fed, right? The Federal Reserve, which began raising interest rates a year ago to tame inflation, right? And this put pressure, right, on the SVB or the Silicon Valley Bank, because higher borrowing costs actually, decreased the momentum of tech stocks and just allowed SVB to make less money than they usually did. There was simply too little of a margin for them to create money on, if you understand what I'm saying. Also, higher interest rates eroded the value of long-term bonds that SVB and other banks gobbled up during the era of ultra low and near zero interest rates, right? So what happened once the interest rates increased? The $21 billion bond portfolio of SVB was yielding an average of 1.79%, where the current 10-year treasury yield is around 3.9%. So you could say that they were literally operating at, figuratively operating at a loss. And at the same time, venture capital began drying up because the market is generally in a downtrend at this point, forcing startups to draw funds held by SVB. And then panic started happening, right? On Wednesday, SVB announced that it sold a bunch of securities at a loss and that it would also sell 2.25 billion in new shares to shore up its balance sheet, right? And this all triggered a panic among key venture capital firms who reportedly advised companies to withdraw their money from the bank. The bank's stock began plummeting on Thursday morning, right? And by afternoon, it was dragging other bank shares down, and basically that's where the bank run started happening. But what is happening, in the aftermath of this entire situation? Well, it's unlikely to set off a domino effect like we've seen in 2008, right? Because the system is currently well capitalized and liquid as it has ever been, as Moody, rating agency chief economist Mark Zandi said. All insured depositors, no later than Monday morning, will have full access to their insured deposit, so they will get their money back, and for the other people, they get their dividends over time. So it isn't that big of a problem, but tech and crypto sectors may be in for a rough ride, as we're seeing from Bitcoin's price at this point, which continued dropping once again after a little pullback towards the upside. Now, I'm going to get back into the chart in a second, but what Moya said on Friday was that everyone on Wall Street knew that the Fed's rate hiking campaign would eventually break something, And right now that is taking down small banks. So these small banks that don't have enough margin to actually operate anymore, they could start to break down, right? And this is not SVB. SVB was actually a huge plan with like over over $200 billion in assets, right? But smaller banks can also fail due to this, what's happening right now. So we could see a few more failures coming up in the future. Now a buyer could still emerge for SVB, and this is actually pretty interesting because we did see, from this article right here, and for those of you that actually follow Elon Musk's Twitter, he said that he is open to acquiring transforming the Silicon Valley Bank into a digital bank, right? Quote unquote cryptocurrencies. His tweet may be serious because he did say in the past that Twitter was something that he intends to work with and transform it into a digital banking or payment platform in some way, shape, or form. So if Musk actually enters a bidding war for this bank, that could be pretty cool, right? Pretty cool, and he could probably raise a lot of funds and make something good happen with it. So lastly, what I wanted to do, just looking at Bitcoin at this point right now, we can see the prices are looking decent, right? We're around the 20K mark. We're in a crossroads, so to speak. We are either going to move up into the 30K level or down into the 10K level as we break down either from this zone of strong support that we have around the 15K mark or strong resistance that we have around the 25K level. And that's pretty much it, right? If you want to look at other cryptocurrencies, what I like to look at is the S&P 500 to see where the market in general is going. And obviously after the SVB crash, the market had a huge weekly red candle, right? Kind of moving towards the downside, but in general, it's not looking too bad. I mean, we did pull back towards the upside. We did establish a strong zone of support around the 3570 mark, but for me, the US 500 could be reaching a slightly lower zone that does coincide with fib levels when it comes to the pandemic situation and all of that stuff. And the fib levels could be all the way down into the 61% mark, right down here at the 3.2K mark. So for me, this would be the case if Bitcoin reached the 10K level, right? So if the S&P continues going down here, Bitcoin is going down into the 10K level. But if the S&P is moving up, Bitcoin will probably follow as well as the entire cryptocurrency market. So thank you all for joining in for another video. I hope you guys enjoyed it. Make sure to drop a like, subscribe to the channel, follow the Satoshi Club socials down in the description below. And I'm going to end it right now. I'm not a financial advisor, and you should do your own due diligence before investing into anything in the blockchain, crypto, or NFT world. So thanks for watching, and I will see you all in the next video.